Thank you, Mr. Chairman, and good morning, Mr. Secretary. First, I'd just like to say for the record, and the ranking member, who unfortunately is absent at the moment, but who appears to be obsessing over the timing of the introduction of my GSE bill, that as soon as he produces the GSE bill that he promised in the last Congress, I would be very happy to coordinate the timing of the introduction of my own bill. And would just note, as a general practice, Mr. Chairman, I try to improve my bills before they're voted on instead of after. Mr. Secretary, in response to the gentlelady from California, I want to make sure I heard what I thought I heard, and I thought she asked you, do you support the three options that were just presented? And I think I heard you say, not necessarily, and if that is correct, we waited 2 years for this? Did I understand your answer correctly, that you are not necessarily supportive of the three options you presented?
No, she asked me if I supported option one.
Option one.
And I said, and I'll say this in response to any question, and this is very important for people to recognize.
Well, let me ask it this way. Will you support option one? If you're not necessarily supportive of option one over option two or three, will you support option one?
Congressman, we played out three options for a reason, because they each have advantages and disadvantages, and we want this.
Are you willing to support each of them? Yes or no? It's not a trick question, Mr. Secretary. It's just a yes or no question.
This is an important thing. Remember, we're living with a crisis caused by a legacy of bipartisan failures designing the role of government in the financial system as a whole. So how do you feel
Mr. Secretary, if you would answer the question, I'd be happy to give you time to give it some context, but it's a simple question. You're presenting three options. Are you willing to support the three options?
Let me say this, without penalizing the gentleman. We do want the Secretary to have opportunity to respond to the question. And in fairness, we had a question last week which was just a yes or no answer. And it is sometimes hard to simply give a yes or no. But I'll go back to the gentleman and add an additional 30 seconds to the gentleman's time.
The reason I say this is because, and this is why we started with options, because it depends a lot on how Congress designs them. And you could do a mix of these things that might be better than any of them individually. You could design option one in a way that would have a very substantial role for the government in crisis. It would be worse than the other options. You could design option three in a way where the government has much less exposure to loss in a crisis. It depends overwhelmingly on how you do this, and critically.
So Mr. Secretary, if I could, and forgive me, there is a limited amount of time here. You're not necessarily supportive of any option depending upon how it's written. Is that a fair assessment?
It all depends on the design of the specifics in each choice. That's why you can't know what the effect would be on.
Well, let me move on to another question, if I could, Mr. Secretary. On page 2 of your testimony, you say it is, quote, very important to wind down Fannie Mae and Freddie Mac at a careful and deliberative pace. You and the experts at Treasury have now had 2 full years to study the matter. What is the careful and deliberative pace? Media reports seem to indicate that you have said 5 to 7 years. I do not know if the media reports are correct. So what is a careful and deliberative pace?
It's a careful and deliberate pace. I've said it will probably take somewhere in the range of 5 to 7 years. And that's based on the judgment that you need to move carefully, because by any measure the housing market's in a state of substantial stress still. But of course that judgment about pace, if you leave it to the government, will be designed by the FHA and the FHFA. It's not something that I can design. It's their authority to design.
Mr. Secretary, in speaking of option 2 and 3, I'm still concerned about the ability of the government to be able to accurately price for risk. Acting FHA Director DeMarco, before this committee in September, said, quote, the presumption behind the need for an explicit federal guarantee is that the market either cannot evaluate and price the tail risk of mortgage default, at least at any price that most would consider reasonable, or cannot manage that amount of mortgage credit risk on its own. But we might ask whether there is a reason to believe that the government will do better. Already we know that the National Flood Insurance Program is $19 billion in debt. The federal crop insurance program has cost the federal government about $40 billion. PBGC has a reported deficit of $23 billion at the end of FY 2010. Barclays believes that FHA has dramatically underpriced its risk and could face losses of up to $128 billion, and we know that recently there's been pressure on the Depository Insurance Fund of the FDIC. Why should we have any confidence that government can accurately price the risk on option 2 or 3?
I share your concern about this. And it's an excellent question, and it's one reason why you have to be very careful in embracing any of the 3 options on the table. And you want to remove that decision about how you price the guarantee, if you have a guarantee, from any interference by the Congress, and you want to keep it as independent of politics as you can. And one of the reasons why the government's record is so terrible in those programs is because you have subjected those judgments, which are very difficult, to excess political interference by some of the stakeholders in the system. Now, I'll give you a few other counterexamples so that you don't lose hope completely in this context. If you look at the FDIC guarantee program in the crisis, all the Fed's programs to prevent the financial system from collapsing, the government's investments in the banking system authorized by Congress, all those investments all had a form of guarantee, had risk in there, were priced in a way that the government had a very, very substantial positive return. It's not impossible, difficult to do, but if you're going to have a chance, you have to remove the judgment as much as you can from political influence.
Ms. Maloney?